Hello everyone, welcome to Monday Morning Muscles. We've got a lot to talk about, so let's get going. Now, obviously the big stuff, as we mentioned in last week's Monday Morning Muscles, was the unemployment numbers on Friday. That really sent these markets tanking on Friday's session, and you're wondering why. It was 4.3% unemployment. We came out at 4.2. Markets expected 4.2. We should be good here. Well, there was this little contingency of the market that was expecting unemployment numbers to get even higher because that's what the trend has been for the last 6, 7, 8 readings. If that was the case, that would put further pressure on the Fed to cut 50 basis points. But lo and behold, unemployment not looking so bad. Maybe we won't get 50 basis point cut here soon. I've been saying 25 basis points, at least one for the remainder of the year, maybe 2 or 3, but we have 3 meetings left. September 18th is that next meeting. I'm still staying on the page of 25 basis points, one tiny little cut, just to test the water and see what's going on. And I think the unemployment numbers last Friday verified that. But boy, did it have an impact. We saw NASDAQ down almost 5%. We saw S&P down 3.5%. A lot of that coming just on Friday alone. So brutal week. Will there be market movers this week? Probably not as much as we had last week. Let's go and look at the first topic here, which of course is going to be earnings calendar. As you notice at the bottom there, there's almost nothing reporting this week. 226 companies. However, I had to put it on here because there are a couple of important ones which may be in your portfolio. On Monday, we start things off with a heavy hitter. That's going to be Oracle. And you'll notice that for the second consecutive week, we have BYDDY. That's BYD Motors, EV company out of China. They were supposed to report last Monday. They bumped it to this Monday, and who knows? Maybe they'll bump it again, but for right now, they're scheduled for Monday. Tuesday, we've got the old meme stock, GameStop. Oh, that should be an exciting one. That thing, it's just a slow race to zero for GameStop. We'll see what their earnings numbers look at. And then you have Dave & Buster's. Wednesday, you've got nothing. And on Thursday, Adobe, Lennar, and Kroger's. And that wraps up your earnings calendar for the week. Relatively light, but again, Oracle and Adobe, some pretty big names there. And GameStop, if you want to just revel in the fun that is that securities movement. But don't trade that thing. Come on, that's just straight up gambling. Okay, so we've talked about the unemployment numbers, and I think I mentioned this last week on how it's my belief that we're starting to see that become more important than inflation. But that doesn't mean that inflation is done. We do have an announcement coming out this week. Actually, 2 announcements coming out this week, which are going to be pretty important on that inflation front. And of course, that's going to be the consumer price index numbers and the producer price index. Wednesday at 8:30 a.m. Eastern time, that's when we get our U.S. CPI numbers to come out. And you can see right there in the hard red edge, 0.2. Expectations are we're going to stay right around 0.2. And I'll show you the year-over-year change. This is month-over-month. I want to show you the year here in just a second. Day after that, on Thursday at 8:30 a.m. Eastern time, the producer price index comes out, and you can see they've been doing pretty good. They're definitely lower than they were several months ago. The CPI number ticked up here recently, but the PPI is slowly drifting lower. Let's take a look at the year-over-year number for consumer price index, which of course is the big measure of inflation next to the core PCE. And you can see here that we have been drifting lower. The last 5 months have been getting lower and lower. The hard red edge you see says 2.9. The expectation is right now that we're going to see a 2.6 number come out on Wednesday's reading of consumer price index. Now, 2.6 would be a good sign, means inflation's even more under control, which means that the next core PCE price index number could come out even lower, which would meet the Fed's mandate. So all in all, things are looking pretty good. Unemployment was really getting a little too fast of a trajectory to the upside here. And all of a sudden, we saw last Friday a slow tick down. That's good. We see inflation continuing to drift lower. That's good. Could it be the soft landing that everyone's talking about? Well, if you want to know more about that, you should take Bill Addis's Canary in the Coal Mine Bonds class, because he talks a lot about that and the soft landing and what the possibilities are, because he has got 40 plus years of bond experience and he's seen these types of things before. Now let's move on to getting the tail end of what we're going to talk about. We have the U.S. market will be giving their Fed announcement on September 18th, but we also have a Fed announcement coming for the European Central Bank. And that will happen on Thursday at 8:15 a.m. Eastern time. So in the wee hours of the morning, they're expected to drop 25 basis points from 4.25% down to 4%. They have already been cutting. All right, this would be their second cut. Now, the U.S. has not cut yet, so we're starting to look at these other countries like, hey, wait a minute, you guys are already cutting? We haven't even left yet. Well, we'll start that most likely on September 18th, and we'll see if we can continue on at our previous meetings. Of course, we have another meeting in November and another meeting in December. So 3 FOMC meetings left, 3 opportunities for scheduled rate cuts, barring any surprise rate cuts that may happen. Okay, so that's your central bank announcements. And then, normally we don't talk too much about the British pound, but I figured today we should, because this week we've got a couple announcements for the British pound. So let's get those out of the way. And the reason I'm bringing this up is the British pound, as of recently, has had a very interesting price movement. It had a really aggressive run up. It's been making higher highs and higher lows. And then all of a sudden, we've seen it kind of hesitate for a couple of weeks. And maybe people know something that's coming out here soon. The first one's going to be claimant count change. And what this means is, this is their unemployment numbers, essentially. And we'll see if those numbers are increasing or decreasing. That's going to happen Tuesday at 2 a.m. Eastern Time. So not going to impact the U.S. equity markets, but certainly could impact that Forex chart, which has been looking great for the British pound. It's gained tremendous value over the U.S. dollar over the past few months. And finally, G to the D to the P. We have a gross domestic product, so does England. What are they doing? Clearly, as you can see on your screen, not much. Wednesday at 2 a.m. Eastern Time, we will see their next announcement for GDP. Their previous was 0%, meaning they're not doing nothing over there. Next reading is expected to be 0.2%, so much lower than the US, but finally maybe getting into positive territory for the GDP for England. So this is going to be a couple of important days for anybody trading the British pound. If you are, be very careful at those times. Of course, that's going to be at 2 a.m. Eastern Time, while most people will probably be sleeping, but that's one of the beauties of the Forex markets is 24 hours a day, almost 24 hours a day trading. So if you're going to be in the Forex market, be careful with that British pound next week. So that, my friends, is your Monday Morning Must Knows. We'll see you next week.